In today's video, I'm going to share with you my simple process to catch 1 to 4 risk to rewards using only 2 time frames. This process stops you from thinking so that your mind can go into the process of subconscious trading, and you can only do that once you've built consistent habits. Subconscious trading is where you'll see consistent profitability. Just before we get started, make sure you go down into the description of this video and download our free PDF. Once you've downloaded that as well, we're going to send you all of the winners that you can see inside the community every single week, and you can see how our traders are executing our strategies on a consistent basis and how much percentage that they're making every single week as well. Inside a sell range, we are only going to look for sells. Inside a buy range, we will only be looking for buys. I'm going to share you this process so that you can start to trade on autopilot, where your thoughts will become more quiet. And this is the profitable trading stages. This enables you to trade direction without thinking. Previous sideways ranges on the charts, followed by initiations to the downside, or previous sideways ranges on the charts on the left, followed by initiations to the upside. This is the first part of the RAMC pattern: range, initiation, pull back into this range in the future, mitigation, and continuation if we complete into the previous high. This is a bullish order flow pattern that repeats over and over again in the markets, because this is the only way that the banks can move prices higher. So what we understand this as is bullish intention in the market. A bullish intention is shown when we break out of a sideways range, and it's repeated again in the future at a point of mitigation from that previous range to play a continuation phase to the upside. Exactly the same on the opposite side. When we pull back into a sell range and we react and follow through, then we target this low. Range, initiation shows the intention. Pull back into this range is the point of mitigation where we're going to be looking to take our trades from for the continuation phase. This is a bearish order flow pattern. This is a bullish order flow pattern. This pattern is the key to market direction understanding and will form our mechanical process for trading direction. So we're here on the daily chart. The reason that we're starting on the daily chart, or a monthly chart or a weekly chart, whichever one that you decide, is that when we see reactions from these previous sideways markets that have initiated to the upside, when price pulls back into these areas here in the future, this is where we will go down onto a 15-minute chart and we will look for our bullish setup. The reason that we're looking for our bullish setup is because this is a buy range. So we only want to be looking for buy setups inside the buy range. Now, if we're wrong and price doesn't continue, we can still see huge moves in the market. This is a 200 pip move here to the upside. The reaction from this sideways range so far has been 300 pips. The reaction from the sideways range that we've seen here has been 250 pips. And again, the reaction here has been 370 pips. So these reactions that we see in the markets, when we think about our stop losses on the 15-minute chart are 10 pips. Our targets are 40 pips. So if we're seeing 200 pip moves, that means that we're going to get multiple setups in those directions just because we're utilizing the higher time frame areas, and then we can trade them with our setups on the lower time frame and make more profits and have more opportunities to trade as well. If you decide that you wanted to trade on Chuck's 1-minute setups, he uses between a 2 to 3 pip stop loss. So when we think about 200 pip moves or 300 pip moves, the amount of opportunity that we can start to see on a weekly basis is huge. That helps our psychology to stay in abundance mode so that we don't start to overtrade. So that is the first thing that we're always looking for to create this mechanical setup. We are looking for previous sideways range in markets, followed by a breakout to the upside. On the left-hand side of the charts, when price comes in here on the right-hand side of the charts, this is where we will be going to a 15-minute chart, and we will be looking for a slowdown and then looking for setups in that overall direction. We can also see on the charts, I have next immediate swing high written on the charts. Now, what does that mean? What that means is because this range here has created this high in the initiation, when price pulls back into this range here in the future and we go to our 15-minute chart and we look for our buying setups, this is where we're going to be buying into this high here. This will give us our direction into this high, because if we complete the RAMC model, range, initiation, mitigation, continuation, this high should become the next target following this bullish order flow pattern that we're using for direction. And it's the same on the opposite side. This range that we're currently reacting from now in current price, because we initiated here to the downside and created this low, if price sells from here and we look for our selling setups from here, this will be the next direction that we will be looking to play. Now, if we are correct on this direction, we're going to have a direction for the next 300 pips, which is possibly going to be the next few weeks of trading. In exactly the same way that when price pulled back into this range here, that we initiated here to the upside from, it doesn't matter that we pull back in here once, we can always come back into the same range again and play the same intention again as well. But we've had a very clear direction here to the upside now for the past 300 pips. There's been many trades here on the 15-minute chart to get involved in bullish continuation. And there's been many trades here on the 1-minute chart following Chuck's strategy to get involved in bullish continuations. When price comes back into previous sideways ranges, for example, if this is our bullish range and we're following our bullish direction here, now when price comes into a sell range, this is where we want to be a bit more open-minded and say, okay, is price slowing down here? If it is, then we can play continuations away and target this low down here. Or are we still seeing bullish continuation structure in the market? And then it's likely price is going to target that next immediate swing high. So between this buy area and this sell area, we have very clear bullish direction here within the market. And like I said, same on the opposite side. If we start to sell off here this week, we have very clear direction down into at least this buy area. And then if we continue, this is the next area or direction that we are looking to trade from. This keeps our process a lot more mechanical because the key to understanding is we're not predicting, we're just identifying and reacting to what the price is showing us. You don't have to predict the markets to make money. You have to enter setups in the direction of your higher time frame patterns and let risk to reward and probabilities work for you. So essentially you're learning pattern recognition and then how to trade those patterns flawlessly. Now we can always understand direction. We're going to add on our second layer. We've understood our previous sideways ranges. If you don't know how to identify sideways ranges, it is inside our price action course. It's a rule-based system. So once you can identify them and you've practiced seeing them, you're always going to know how to identify a sideways range, which means you're always going to be able to build directional trading opportunities. And you're always going to have an edge that you can use in any market conditions. We, of course, only trade Euro USD, but if you want to trade a different pair or you want to trade crypto, you can use this exact same process on any other pair. Now we have our higher time frame pattern, which shows us our trading direction. We'll be using our entry time frame to trade that direction during our specific time window and looking for one specific pattern. Sessions, we are only going to execute trades during our time window. One candle after or one candle before is not allowed. This will take some discipline at first, but after you backtest this, you'll become more comfortable knowing that your discipline will pay off long term. You can pick any 2-hour window in New York. There's 12 till 2 p.m. UK time, 2 p.m. till 4 p.m. UK time, or you can do 3 p.m. to 5 p.m. UK time. These are all great timing sessions. And notice we're only going to be using 2 time frames. One higher time frame like a daily, weekly or monthly to find our RIMC pattern. And then we're going to be utilizing the 15-minute chart for our setup. This is exactly how I trade. This is how we all trade inside NJT as well on the 15-minute chart. So we can look at the higher time frame sideways range here that initiated to the downside. And now every time we pull back into this range here in the future, we are going to be looking for selling opportunities or selling setups. It doesn't matter if there is a buy setup being presented, because of course a sell setup is a sell fractal that we're looking for, a high and a higher high. Also, you can see this as a bullish trend, a low, a high, a higher low, and a higher high. And then we're going to be trading the opposite direction. And on the opposite side, if we were looking for buys, which we're not, you'll be looking for a buy fractal pattern. That is a high, low, lower high, and lower low, followed by a move in the opposite direction. This is the setup that we're going to be looking for here in the market that's happening during our timing window. If this happens before our timing window, we can just execute at the market open for New York for our session. Now let's start to have a look at all of the opportunities that are inside this red area, which is our selling area, that we could get involved in utilizing the 15-minute strategy. Wait till the end of all of these trades so you can see how repeatable and consistent this is. Let's just read the price delivery. So moving into our location, we saw this bullish continuation structure. Then we saw price run above this high and we had a strong rejection of higher prices. This is a really good sign for us to see here at our point of mitigation. We also have our selling fractal here. We have our low, high, higher low, and a higher high. We're reading this in current price, and the reason that we're reading this in current price is because we want to see sell volume from the banks come in at current price. If we was to read previous price, we're not going to get the most accurate data. So learning to read current price on the 15-minute chart is one of the best skills that I've ever learned in trading, because it's enabled me to see the volume coming into the market without using something like a volume profile, just reading the raw price action. And then we see prices just continued here to the downside and the market open here. I just execute a sell, and this is one of those trades that took me out for a loss. Then we move on to the next day. Until price creates a fractal from this red area, I'm not going to be looking to get involved in any trades. So there is a fractal setup here, low, high, higher low, and higher high, and this would be the execution here. However, this has not happened from the red area, so I only wait for price to get into the red area or create it inside the red area, and then I will trade it after. So this is the low, high, higher low, and a higher high, followed by my entry candle for me to go short here. This trade would have gone to break even and then took me out for a break even. Again, I'm keeping exactly the same process for every single trade. I'm keeping the process consistent, and that is what's going to give me a very consistent outcome. You need to manage yourself and manage your mind through these times where price is slow and the strategy is slow. But once you've backtested this system, you'll understand the performance of the system and nothing will surprise you in live time. So here we can see our fractal created, low, high, higher low, and higher high, and price was just in continuation here to the downside. So on market open, you can just execute the sell position, and this trade would have run to a 3.7 and then would have come back for break even. Some of our traders use a 1 to 3 risk to reward using the 15-minute strategy because there's so many different variations that you can use with the 15-minute strategy. I teach everyone mine inside the webinars so that you have my exact rules, but when you start to backtest the system, you're also going to see repeatable things that you can use as an edge, and you're going to let the data tell you what to do. So this is another trade that would have gone to break even. We move into the next day. What do we see? Here we have our low, high, higher low, and higher high, followed by the entry, which would have taken you out for a loss. Most traders, after they see a loss, a break even, and a loss, will start to change something within their system. Now, this is the reason why we don't change anything within our system, because if we continue on to our next session, we can see that we get the fractal high, the low, high, higher low, and higher high. So market open, you're just going to be executing this for your short here, and this is one of those trades again, would have gone to break even again before continuing to the downside. Now we get into the next day. This is where we start to take advantage of the 1 to 4 risk to rewards. Low, high, higher low, and higher high, followed by a move in the opposite direction. And this is one of those trades that would have played out. Loads of our traders got into this on the 15-minute chart and took advantage of this trade here. Then again, we move into the next day. What do we want to see? We want to see a fractal high within our session from our point of mitigation. So what do we see? Low, high, higher low, higher high, followed by our entry candle, which would have been right at the top of the market here, looking for our continuation here to the downside. Then we move into the next day, which is the Monday, again looking for the same setup. As we can see here, between this low all the way to the high, if we read all the candle highs, this is just one straight move up that run above this previous high. So a fractal high is a move up, a pullback, a run above that high, and a move in the opposite direction. Now, if we start to see something that looks like this, that's a fractal low, and then price runs above a previous high and then moves to the downside. Prices come from a sideways range, not a fractal price delivery. So these are not trades that we look to get involved in and not trades that we look to take within our session. There was a setup here within the session as well. Low, high, higher low, and higher high, followed by our execution candle, which is here, where we could look to take advantage of this trade here to the downside, which would have gone to break even. Then we move into the next day. Again, we see our low, high, higher low, and higher high, followed by our execution candle on market open. And this is where we can take advantage of, again, the 1 to 4 risk to rewards. So if we just go back and we look at all of the trades that we've been in and have a look at the performance of utilizing this system, we saw a loss, -1, break even, -2, break even. This, after 5 trades, most traders will start to change something. Now, this is why you don't change something. You have to understand the performance of the system. Sometimes it's going to be slow, but when it's good, it's really good, and a lot of percentage is going to be made. So we got 4, 8, break even, 12. So 12 minus your 2 losses is going to put you into 10% profit over a span of 2 weeks. And this is why losses really do not matter in trading. What's important is you have a process to catch the winners. Then you can let the high risk rewards progress you into profit every time the market gives you one. Again, you can see every single execution is following the same repeatable process. You can also see we only take 1 trade a session. This is so that when we do go on these loss phases, which are inevitable in trading, our drawdowns will be very small. And when we eventually go on those winning streaks, or when the tides turn in our favor, that's when we can really take advantage of the moves here within the market. Thank you guys for watching. Make sure you grab that free PDF down in the description of this video. Also, you can visit our website, notjustatrade.com, if you want to find out more about how we trade and learn our strategies and take our price action course as well. Thank you guys for watching, and we'll catch you on the next video.